I think that over the last 6 months, in which, by the way, mid-cap, if you look at the S&P 400, has outperformed the S&P 500. I don't think that's something that that a lot of people know.
Joe, Steve, let's talk about midcaps today. They're becoming more popular in the last few months. And Joe, I'm going to start with you. I mean, I've come up with three possibilities, and you can tell me if I'm right or wrong with any or all of these. Are they trading at a discount? Is that why they're becoming more popular? Have growth stocks run their course for this part of the cycle? Or are investors just realizing that mega caps are way, way too much of the market? What do you think?
Well, I think maybe some of those things apply. I'm not sure that's really why people buy them, though. There's a difference between, like, when we look at fundamentals, right? I always say this. Fundamentals, you're talking about earnings growth and valuations and things like that. If you think about it, the average person who buys into this market or any market, they don't know what the fundamentals are. The average person, they don't know what the expected earnings growth is for the S&P 500 or the S&P 400, which is the mid cap index, or the S&P 600, which is the small cap index. They don't know that stuff. They don't know what the price to earnings ratio is. The vast majority of people don't know what a price to earnings ratio is, much less, I mean, they don't know the definition of it, much less what the number actually is for each of these indexes. And that's not a knock on the average investor. It's just that they don't have the time to go and investigate all these things. Well, we do, but they don't. And they buy based on a story. They buy based on the narrative. So I think that over the last 6 months, in which, by the way, mid cap, if you look at the S&P 400, has outperformed the S&P 500. I don't think that's something that a lot of people know. You had a big drawdown during December where large caps outperformed again, but that's kind of what we talked about yesterday, right? That was kind of the anomaly. If you look at the last 6 months, things are definitely moving towards small and mid cap. So why? What's the story? Why? I think the story is really obvious and simple. It is that Donald Trump has been elected and that his policies are perceived to be positive for the domestic economy and negative for the rest of the world. That's not exactly true, but it doesn't matter because that's what people believe. It's that old thing about, it's not it's not reality that matters. It's what everybody's perception of reality is. And so that's the perception, is that he's going to be positive for the domestic U.S. economy and probably negative for the rest of the world. I don't think either one of those things is really uh, exactly true, and certainly not to the extreme. But having said that, I think the domestic economy, the U.S. economy, this is something Steve has used this phrase a number of times: cleanest dirty shirt in the laundry, however you want to look at it. U.S. economy's performing quite well versus the rest of the world. And by the way, I wanted to mention something. Somebody mentioned yesterday, one of the comments, I think on yesterday or maybe the day before, was that we needed to get out more because the bottom part of the economy here, the bottom people in the economy, the lower income people are doing very poorly. And then we didn't know what we were talking about, I guess. I don't know. I want to talk about that for just a second, and we'll come back to the mid cap thing. Look, when we talk about the economy as a whole, we're talking about how the economy affects investments. We're not making political statements here. We're not making any kind of judgments about these things. What affects the markets is the overall economy and the aggregate economy. And that's what we have to focus on. We know that there are people out there in our economy in the United States that are not doing well. That's always the case, by the way. And I think there are some unique factors that make that a topic today. And quite frankly, that's probably why we have Donald Trump as president, because that lower cohort, that lower income people, and middle income too, kind of, that whole group has been, I think, marginalized over the last 30 years, 25, 30 years. So believe me, we get it. Okay. But that's not our focus here. We're focusing on investments, and the investments are affected by the macro economy, the aggregates. Just on the side there. Okay. Back to mid caps. Look, the fundamentals are there. Mid caps are cheaper than certainly a lot cheaper than the S&P 500. A PE of, well, I'm gonna pull up my spreadsheet, my handy dandy spreadsheet from my buddy Howard Silverblatt. Let's give Howard some credit here. Howard Silverblatt has been working for Standard and Poor's for many, many years. I've spoken to him a couple times on the phone. I'm not going to claim to be his best buddy, but I have talked. He will take my call. He'll probably take yours too, Bob. So give him a buzz. He's a really nice guy, and he puts out this free spreadsheet on a weekly basis. He updates this thing with estimates for large, mid cap, and small cap stocks, bottom up estimates. He aggregates all this stuff together to come up with an estimate for the entire index. He does an amazing amount of work, and he's been doing this for, I don't know, close to, I think, 40 years for S&P. And like I said, just a really nice guy too. Anyway, when we look at price to earnings ratios, which is a valuation metric, it tells you how expensive things are relative to their earnings. The S&P 500 trades for, based on 2025 estimates, it trades for 22 times those estimates. That's the earnings we're going to get this year. We don't know that that's exactly how things are going to come out because we don't know what the economy is going to do, but those are the estimates right now. The mid cap index, on the other hand, trades for 16 times this year's earnings. And the small cap index is even a little bit cheaper at about 15.9, not significantly different than the mid cap. But I think the big difference is on the growth side. Earnings growth for the S&P 500 is expected to be about 16%. I'm not going to kid you, 16% growth for a large cap index, that's freaking awesome. That's a great earnings growth number. But it pales next to the mid cap. Mid cap is almost 27. And small cap, by the way, is over 41. That's the expectation for this year. Now, look, we don't know that those expectations are going to be fulfilled, but I don't think most people even know that those expectations are in there. So, yeah, I think there's some reasons why people are going to mid cap, and I think I'll put it this way: I think they're doing the right thing, maybe for the wrong reason. And you know what? Who cares? Uh, because we own mid caps, so we're really happy that other people are buying them now.
Steve, this I found interesting that most individual investors are underallocated to mid caps, even though mid caps have outperformed large cap growth in every 5 year rolling period. 55% of the time they've outperformed since 1983. That's incredible to me.
Yeah, I think so a lot of times investors they're not looking back far enough in their review mirrors. They're kind of looking back in the review mirrors in terms of the car that's directly behind them, rather than like, hey, what's traffic done over the last several blocks? So yeah, short-term memories, which is why they can also switch pretty quickly. And if we see what Joe is alluding to in terms of growth, and especially when you consider it with respect to much more reasonable valuations, we could see that momentum shift with investors as they hop on the bandwagon, just like you might see a sports team that nobody really cares about, and then they start winning game after game after game, and all of a sudden they got fans you never heard of. Well, we might see the same thing with mid caps this year. I also want to kind of touch on a few other points. One of the really nice things about mid is they can give you a lot of the benefit of the small caps with higher quality companies and less risk. So that's another thing to like about them. I know Joe mentioned the valuation's a little bit lower for the small. The growth expectations are a bit higher, but you still capture a lot of that gain, and you can do so with some pretty high quality companies when you're taking a look at the mid caps. Because we're talking about mid, most people would still look at it and say these are giant companies. Now they're not trillion-dollar companies like Apple or whatnot. But those trillion-dollar companies are pretty freaking expensive. And you know what? When you get that big, when you kind of become the market, it's hard to outgrow the market. Another thing we always talk about, like how much disagreement there is among politicians. Um, there's a lot of agreement about reshoring. There's a lot of agreement about bringing jobs and manufacturing back to the U.S. and a lot of disagreement about how you do it. Do you do it with tariffs? Do you do it with policies that encourage like the Clean New Deal or what? Disagreements about how you do it. But there's a fair amount of agreement that you do it, and also good topic for another time is the demographics. But I've mentioned that largely thanks to the one-child policy, China's running out of workers. So, you look to places like Mexico, right across our border. So I actually think there's a sustainable trend here supporting U.S. growth and supporting mid caps, and maybe a good story here that goes beyond just what a mess Europe is. And when you look at the Germans who are banking on cheap Russian energy and exporting to a growing middle class, they do have a bit of a mess. But I think there's a good story here for North America, and it's a story that should benefit mid caps. So that's going to be my attempt at a sexy story that gets people excited about mid caps. Is that reshoring's for real, and it's gonna be great, and the mids are well positioned to benefit from it. So that's my attempt at getting a new narrative out there.
So what about you, Joe? You have anything to add to that sexy mid-cap story?
Oh, you bet, man. You bet. Well, a couple of things. Uh, Reshoring. Is there a case to be made for reshoring? Well, obviously, we've had a lot of factory building over the last couple of years. We know that. We also know a lot of it was related to the semiconductor industry. It's not solely that. There was a big chunk of it because of the CHIPS Act. But I think that the fact that we want to reshore doesn't mean that we can reshore. And I think that's where the rubber's going to meet the road here. We're going to find out. And what I mean by that is, for instance, just even looking at the semiconductor factories, Taiwan Semi is building a series of chip factories down in Arizona. They built one that was supposed to be started up. Well, it was supposed to start up last year, but they didn't have people. They didn't have workers to work in that factory. So it got delayed to this year. The other two factories they're building there have been delayed because they can't find workers. I think that too, the fact that we reshore doesn't necessarily mean that companies, US-based companies, are going to make more money. That's a really interesting thing here. If you impose tariffs on the rest of the world, listen, a lot of companies get parts or raw materials from outside the United States where those costs are going to go up. And we also don't know if they'll be able to pass those through. If they do pass them through, you get inflation. If they don't pass them through, you hurt margins. My point is that not that I know which way this is going to go, and I'm not pushing back too hard on Steve here. I do think we're going to do some reshoring, and I'll touch on that whole thing about North America or the Americas, I would say. I don't know if you said North America or if you said the Americas, but anyway, I think there's a lot of moving parts here with this reshoring idea and bringing things back to the United States. I think that there are that the U.S. government, whether it be Democratic or Republican, they have, as Steve said, they have different ideas about how to do these things. They both think they want to do them. And I think that the governments in the United States and other countries too, uh, are all trying to do the right thing here. They're trying to figure out how to rebalance this global economy that's been kind of distorted, or not kind of distorted, very distorted by Chinese trade policy. And so I think these governments are trying to do the right thing. They're trying to figure out what is the right thing. How do we accomplish this? And it's not an easy nut to crack. Let's just put it that way. As for the Americas, this is part of our thesis that we wrote about 2 years ago in Dawn of a New Era, and then backed that up with, the one that came out about a year ago, The Times They Are Changing. We talked about regional trade blocks, and we do think that's where this is headed. I think really the question is, where is Europe going to be? Europe's kind of the odd man out here, but you're going to see this Asian trading bloc that's going to include China and probably Japan to some degree. Although Japan's another one of those kind of countries. It's like Japan and Taiwan are kind of these odd countries that are in Asia but are aligned with the West more than China. But it's going to be interesting to see how that comes out. Well, you're going to have this Asian trading bloc. You're going to have an America's trading bloc, and while I'm not crazy about the way uh, Mr. Trump for right now, for another week, how he's talked about Greenland and Panama, you got to acknowledge that this is focusing on our hemisphere is something we should have been doing a long time ago. We've got Venezuela and Cuba, for instance, who are under the influence of Russia and China. China has made big inroads into Latin America in various countries through Belt and Road and some other initiatives that they've done. They've made inroads into the Panama Canal and the way it's functioning, the way it's operated. So this idea of focusing on the Americas is a good idea. Now, again, I'm not crazy about his methods, but we'll see how that goes. I think what it does is it does highlight the idea that, look, we need to be looking at at what's going on in the Arctic, for instance. We know that there's going to be economic opportunity there, and we know there's going to be rivalries about how that's exploited or whatever. We need to get our foot in there. We don't right now. We don't have really much of a an opening there. We have some military bases in Greenland, for instance, but we don't really have an access to that Northwest Passage and so forth. So I understand what he's trying to do. I don't like his methods, but that's, that's personal thing. We'll see how it comes out. But the focus on the Americas is a good idea. And I think that we need to take care of our own hemisphere and really get integrated throughout the whole hemisphere, whether it's into Latin America, into South America, Latin America, and Central America, and up into Canada. We need to be a block that works together rather than working against each other. We need to be working together because we need to be focused on because we talk about. I said something about natural resources. Well, uh, Greenland, for instance, has a lot of these rare earth metals that are needed that are really dominated by China right now. So I understand why we're making that play, and I think it makes a lot of sense. So how that how this conversation went from midcaps to that, I'm not sure, but it is about focusing on the domestic economy. It's about focusing on the Americas, and I think that's a good way to go. We'll see how it comes out, put it that way. Um, it's all part of this big picture of trying to rebalance the global economy after years of distortion from China. So it's not going to be quick, I'll tell you that, and it's going to be messy. There's going to be things that work and things that don't work, and probably a lot of trial and error before we figure out how to do it. But it seems like we're all determined to try.
Thank you, gentlemen. And you heard Joe earlier respond to a comment that came in. So those are important to us. Make sure that you let us know what you think, what your comments are in the comment section down below.